BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Good morning, everybody. Let's have a look at Bitcoin, which has actually managed to get all the way back up to the Bollinger Band again. So it did it yesterday, and it's trying it again today. That's your 20 daily and your 21 exponential. They're more or less at the same place, roughly 63,250, we'll call it. So that's like a major place for it to go to. You know what? If it breaks there, then whoopie-doo. We actually break out. Well, the idea is we could be breaking out. But until then, we're not. So there's nothing much to say about it than that. The 4 hourly is gathering up some momentum here. Positive cross, and now crossing up above the 0 point on the 4 hourly. Probably best to think about these areas over here, 63,700 and 64,500 again. Death cross retests on the 4 hourlies, that's what it would be. So we saw rejection here, rejection here. Will we see it again, or will we even get up to that level? Again, we saw this sort of behavior previously, didn't we? So we managed to get back above the Bollinger Band, 1, 2, and then 3, managed to hit this major horizontal resistance, then that's where we lost the plot. However, I don't know if you can see it, but there is something going on here which might be worth talking about. We got ourselves some form of triangle formation. Now we are quite close to the end of the apex, so whichever direction it breaks in could often result in a fake out. So if we do break out today, I'd probably still be looking at rejections anywhere amongst this zone. Because normally any kind of formation like this, you want to see it break sooner rather than later. I always see these sort of things on Twitter, and you'll get it right to the end of the apex, and then someone will say, whoever's holding Bitcoin today is holding the winning lottery tickets. I'm like, why? Because we're at the end of an apex. There's definitely volatility coming, but in which direction? I don't know, because whichever direction it goes in, it could even be a fake out, because this is not a resolved formation, really. This is just no man's land, and it's a gamble. So it's getting like that at the moment. However, if we were to base it on Bollinger Bands alone, based on the daily, which is the stronger one, more stronger than the 4 hour, then yeah, we've already hit the resistance, and we'll probably be looking to move down. So that's unfortunately the situation as of right this very moment in time. Let's have a look at the S&P, which is powering through. Unbelievable strength on the S&P here, making its way back up to all-time highs, or very close to, not far away from that. Now, let's have a look. Is there any clues or signs that we are losing momentum here? Because this is the main thing really for me. If we do lose the plot on the S&P, we likely lose the plot on Bitcoin, because the markets are so correlated that you'll probably see symmetry across all markets if this comes down, really. So, and at the moment, there is bearish divergence only on the 4 hourly money flow index. That's all there is, and this is only S&P futures. This is not SPX, for instance. We can have a look at that, although it's obviously not opened yet. Just one driver of hidden bearish divergence. That's all, and a money flow index which is absolutely reasonable. So look at the higher term timeframes then for a daily. Again, nothing to be afraid of momentum on the daily. And again, money flow index is really not high at all. Weekly, let's have a look. Right, so this is where things start to get a little bit of a problem. However, if we do see a pullback on this one, I still believe that this would be the limit. I can't imagine it going much lower than that. And to be honest, I'll show you something in a minute that I think that this could already be it. This could be it, but we don't really know for certain, but it could be it. So we've got the overheated read, you've got the bearish divergence on the money flow index. You know the drill, 2 drives is usually all you need to see a pullback. But if you backdate these sort of reads that we've had in the past, you do get pullbacks on these divergences. So there's your overheated read, there's your divergence, marking the top, massive pullback, a huge pullback actually. And yeah, we did revisit those moving averages, but we generally continued up until we saw this. And again, that's not uncommon for all markets. Saw that, didn't they, really? This is Bitcoin crashed around that time. Again, we can backdate this as much as you like. Overheated read, money flow index, bearish divergence leads into the drop. So I'd probably say that there's enough evidence to say that we already had that, really. So there's your overheated read, and there's your bearish divergence marking the top, and then there's your pullback. and now we're sort of bouncing from that without any signs of real weakness at all on these shorter term time frames, which is all we'd really care about, to be honest with you, if you're looking to navigate our way to another pullback. The only argument that you could make which would suggest pullback on this one is the fresh golden cross on exponential moving averages on S&P 500, so the US 500 basically, not SPX. And again, you know, that would just be a bullish retest. So there is evidence to say that that's going to happen, but would I guarantee it? Nah, no, I probably wouldn't really. Dixie holding on to its 200 exponential, so this is all part of a bullish retest. If you're going to bounce, you'll be bouncing from here. And if the dollar is going to go down any further, we are talking 104.2, which is a fair old bit for the Dixie to come down to, and that's where you'd expect a V-shaped recovery from. So, long story short, markets do appear to be in a relative safe zone for this Friday. Relative. Again, you know, the broader strategy is still in play, which is probably best to sit back, chill out, and do frick all, while this market doesn't really offer much. The risk to reward doesn't balance. That's across the board for all of these charts. There's only one chart that I like the look of, and that's oil. And that's saying something, really. That's not much. Oil's usually my go-to place to trade when everything else is zilch, and that's kind of what it is at the moment. So you can make money, I suppose, up or down if you pay a lot of attention. But I don't want to sit at my computer all day, you know, making little scalpy trades when I can come back to my computer in a couple of months and most likely making, you know, epic life-changing trades. So it's, you know, sometimes you have to, you know, ask yourself, why am I trading today? Is it because there's opportunities here, or is it because I feel like I have to, or is it because I'm bored? You know, and that's something you've got to ask yourself. I don't know what it is for you, but sometimes I find myself doing that. I go, oh, let's sit down, make a trade. What am I doing? I can't just sit down and make a trade. That's crazy. The trades come to me. I don't go to the trades. What the heck? What am I doing? You have to stand back and go, don't do it. So at the moment, I am still waiting for this situation to resolve, whether to the up or to the down. Personally, I still think it's going to be to the down. It just seems most likely. And that's over a couple of months. Not today, not next week, over a couple of months. I would start to flip bullish if Bitcoin gets back above 65,500. And that's fine. That's what all the hodl bags are for. But personally, from a trading perspective, I still think it's probably better, safer to wait for at least the formation to resolve, whether we break out of this or break down. The formation currently is a downtrend, which makes it harder to really want to trade, and it certainly wouldn't invite you to trade at the centre of a Bollinger Band in a downtrend. That's the last place you'd do it. If there was a gun to my head, it would be saying short this now with a tight stop loss, because if we do come down from this level, roughly from this level, you know, it would be a lower low. That's if we continue with the downwards trend. But, you know, luckily there is no gun to my head, so I can just, you know, sit back and either wait for that to happen or wait for it to go the other way, and then suddenly, before you know it, we're in a much more affluent trading environment, and we can start to look at altcoins and take them seriously and not have to worry about S&P, Bitcoin, Dixie, blah blah blah. You know the drill. Right, so I'll leave it with you there. Hopefully that has been some way insightful. There is a live stream tonight if you want to join the Patreon. There's links in the description below. Other than that, I hope you have a nice day. Take it easy.